Good morning to all of you, sir. Madam, good morning, ma'am. Due to personal real health, our ADG could not join the meeting. Sir, I sent a message to all the participants. I'll just read out message of ADG, ma'am. The Prevention of Money Laundering Act is a crucial piece of legislation in India aimed at combating money laundering and related financial crimes. This PMLA provides a comprehensive legal framework to prevent and control money laundering activities. The Act encompasses various provisions and regulations that empower authorities to investigate and take action against those involved in money laundering and related offences. It is essential for companies operating in India to understand the intricacies of the PMLA to ensure strict compliance and mitigate the risk of legal consequences. PMLA regulations is of the paramount importance for companies operating in India due to several reasons. First and foremost, adherence to these regulations is a legal obligation, and that, if not met, can lead to severe penalties and legal actions against the company and its executives. Moreover, money laundering poses a significant threat to the stability of financial systems, and the companies play a crucial role in preventing their entities from being misused for illicit financial activities. By complying with PMLA regulations, companies contribute to maintaining the integrity of the financial system and fostering a transparent and accountable business environment. Thank you, sir. I'll hand over to Mohan, sir, to moderate the program, sir. Thank you, ma'am.
Thank you, Reddy, sir. Thank you so much. I request ADG Madam, DG Audit, Madam Vaishali, to address the gathering.
Good morning to everyone present here for this online session today. At the very outset, I welcome all the participants for this outreach program. I wish to inform that a similar outreach program was conducted last month also, and it had elicited a very positive response. And I hope that this session also will add to it. This program is being organized under the aegis of the Director General of Audit, which has been appointed as a regulator under the provisions of the Prevention of Money Laundering Act 2002. And this is for two sectors: dealers of precious metals and precious stones, and agents pertaining to real estate. Being a regulator, it was considered important to make these two sectors aware of the responsibilities cast upon them under this Act as reporting entities. Therefore, this program is being organized for the dealers and agents operating in these two sectors across the states of Tamil Nadu and Puducherry. These agents and dealers are obligated to follow the anti-money laundering regulations to prevent money laundering and financing of terrorism. Under this Act, there are a number of responsibilities which are entailed upon these dealers and agents, such as performance of customer due diligence, reporting certain transactions to Financial Intelligence Unit, appointment of a principal officer in your office. As already mentioned by the ADG's DGTPS's message, failure can result in penalties, which is the worst form of punishment that can be imposed under this Act. As agents and dealers, you play a very crucial role in the financial system of India. Hence, your contribution in the fight against money laundering and terrorist financing and your cooperation and compliance with the Act is essential to maintain the integrity of the financial system as a whole. I urge you to use this program to understand about your roles and responsibilities under the PMLA Acts and rules. Thank you. We will proceed further.
Thank you, ma'am. Thank you so much. I request Sri Mahendra Kumar Dayal, Regional Chairman of GJPC, to address the gathering.
Good morning, sir. Good morning, everyone. First of all, thank you for the Director General of Audit team of Chennai for organizing this. I think this is the second meeting, and 1 month before also we had a meeting and it was really worthful. All the members got a very good, meaningful knowledge also. And I want to thank Neeraj Kumar Malik, also IRS sir, and Madam Vaishali ji for organizing this meeting. And I think this meeting should happen every 15-20 days for awareness of the PMLA Act, because so many members still are not aware of what exactly it means. So thank you for organizing the meeting again and again. And we from our GJPC, we are always there to support this type of meetings for our trade benefit. Thank you so much.
Thank you, sir, for joining on 13th August and also on today. Thank you so much.
Yes, thank you.
I request Mr. Prabhakar, Law Officer, representing TN RERA Chennai, to kindly speak a few words.
Yes, sir. Good morning to all, sir. I take pleasure in attending the seminar conducted by DG of Taxpayer Chennai Zone and DGA Chennai Zone. First of all, I convey my thanks for the invitation. As far as real estate agents within the state of Tamil Nadu, as well as in the Union Territory of Andaman Nicobar Islands are concerned, TNDERA has registered somewhat 3,450 real estate agents. That is comparing Andaman is that is very less in number. Likewise, comparing to state of Maharashtra, that is the registration of real estate agents in Tamil Nadu is less in number. I don't know that is what is the strategy adopted by promoters and builders. That is a that is a mode of sale through agents that has to be ascertained that is in the days to come. Why that is in Tamil Nadu there is a less number in registration of agents. That is a chairperson has expressed very much interest in joining hands with the DGA in implementation of the guidelines that is under PMLA. On behalf of RERA, I request that is yesterday we have sent the flyer and instructions to all the real estate agents that is registered with us. That is, I request all the real estate agents that is who are in the meeting to comply the norms, rules, regulations, and proper accounting standards in order to that is take their business activities to the next level, and also for the promotion of economy. That is this would help their mind trouble-free, hassle-free for continuing their business. So again, I thank you one and all. Yes.
Mr. Karthik Kumar of Tredai, I hope you are there. Mr. Karthik Kumar. Mr. Karthik Kumar of Tredai, can you speak a few words? I think you have to unmute yourself. Mr. P. Karthik Kumar. Mr. Karthik Kumar, you can unmute yourself.
Hi, sir.
Yes, yes, you are clear. You are audible. Mr. Karthik Kumar, you would like to say
It's
something?
audible. Yeah, hi. This is Karthik, Karthik from Tredai, Coimbatore.
Yes,
And
welcome.
I'm very happy to attend the meeting of with your with all the bureaucrats, and we like to know with our industry what to do and what not to do. This would be brainstorming for us, and thanks for joining us.
Thank you, sir. Thank you for representing Tredai Coimbatore. So
Sir.
we start with the outreach program. We are putting a small link in the chat box for the Google form. Participants are requested to kindly fill the Google form. It's a very basic form. It is mentioning the mobile number, email ID, name. It will enable us to reach you and help you, and also share something if you want to. All participants are requested to fill the Google form. Now we proceed with the webinar. We have the main speaker of the day, Mr. Karthikeyan, V. Karthikeyan. He is a specified officer with MEPS Chennai. He is a very distinguished officer. He has worked in various departments, customs, central excise, service tax, also in the DRI and enforcement directorate, and presently he is posted at MEPS. He is coming with a small PowerPoint presentation to just enable us to know better about the PMLA guidelines. Thank you, Mr. Karthik. Over to you. Karthik, I think you have to unmute yourself.
Happy morning, all. Thanks for the opportunity given to me for the second time. And special thanks to ADG Madam from DG Audit and ADG Sir from DG TPS, Additional Director Madam from DG Audit, and all my colleagues over both the directorates. I would like to share a small PPT so that it would enhance the basic requirements for the day. Is my slides visible?
Not yet, not yet. Yes, now visible.
Yeah. So the topic for the day is the proper understanding of the PMLA guidelines, restricting it to the two reporting entities as of now, the real estate agents and the dealers in precious metals, who are all the distinguished participants for the day. I would be interested to enlighten the distinguished participants here. While this session is meant for enlightening the provisions of the PMLA Act, I thought that a better understanding of the PMLA laws would help them to to ensure that they are in line with the intention of the government. Now, if you look at the PMLA Act, the Act was introduced in 2002 and made effective from June 2005. But from 2005 to till date, the Act has enhanced it to the maximum level that is possible in line with the FATF regulations and the world's anti-money laundering laws, in line with the world's anti-money laundering laws. Now, every Act has got a preamble. Now, one should understand the preamble, because every law binds by the preamble of that particular Act. If you look at the preamble of PMLA, it's a very wide and it's a very tricky preamble. An act to prevent money laundering, to provide for confiscation of property derived from or involved in money laundering, and for matters connected therewith or incidental thereto. So if you say the matters connected therewith and incidental thereto, it is like an ocean. If you can fit anything into it, if it relates to an act of laundering, and if it relates to a finality of confiscation of property and getting somebody the punishment or this thing for the offense of money laundering. So the lawmakers have thought about it very well to make sure that the preamble and the future developments of the Act or the future amendments that are brought into place are not in contradicting to each other. That is why they have given a wide connotation of, in addition to the confiscation of property involved in money laundering, they have also included for matters connected therewith and incidental thereto. And that is where we are now into play. When 2005 Act was introduced, it was not at the present stage what it was. The designated business or profession was not there in 2005. It came subsequently in 2013, expanded in 2019, and every day the Act is getting widened. Every now and then it is getting widened. And there are multiple rules which are circumventing around the PMLA Act. The most important rule is the Prevention of Money Laundering Maintenance of Record Rules 2005, which has undergone significant changes. The last change happened in 2023. We are waiting for a further amendment somewhere in 25 or 26, maybe in 26, to expand the further scope of the maintenance of records. But as of now, we are concerned with the last amendment that made in 2023. So these two are very important for a reporting entity to understand before knowing their obligations, their liabilities, and whatnot as per the law. Now, globally, if you look at money laundering, if you take a case of any money laundering, there will be three important factors that are happening in a money laundering case. Rather than I would say a launderer will indulge into it. It may not be visibly present, but if you take any global case of money laundering, you will find these three ingredients that will mandatorily happen knowingly or unknowingly. One is the placement, second is the layering, third is the integration. Now, I want to start with a classic example to understand how deep is money laundering and how effective is money laundering and how are our laws being very effective. I would like to start with an example of a person approached a nationalized bank seeking a loan for his business. Let us say the loan he obtains, he's seeking a loan of about say 25 lakhs. It may be a working capital loan, it can be a term loan, it can be a factoring loan, whatever it may be. That is not a concern for us. He takes a loan of 25 lakhs and the bank also sanctions it. He utilizes a small amount of that loan towards the intended purpose, but the major amount of that loan, he is diverting it to purchase of a capital asset. Let us say a commercial infrastructure in a city. He purchases the commercial infrastructure and let us say it consists of a small mall or whatever it is, consisting of about 10 shops, each deriving a monthly rent. So he is enjoying the rent from day one by purchasing it and by getting a monthly rent. With that monthly rent, he goes to his native place, acquires an agricultural property and starts deriving agricultural income. He is showing in his balance sheet the rental income and the agricultural income and no other income other than his salary as a partner of the firm from which he has taken loan. Now, as long as the principal and the interests are being dealt with properly, absolutely no issues. Now, when there is a default in the payment of interest or servicing of interest or the principal, the borrower steps into and finds out what is the real factor in it. Now, as long as there is no forgery of documents or fabrications or no misrepresentation of facts while obtaining the loan, absolutely it's a civil dispute. When somebody defaults a bank loan, the borrower takes action against the lender takes action against the borrower, and purely it becomes a civil dispute, and a legal action with regard to civil cases is being taken against the defaulter. Now, imagine the lender does a forensic audit and finds out that at the time of getting the loan, the borrower has fabricated documents, forged certain documents to give figures which are inconsistent with his actual business, mainly to convince the bankers to give him a higher loan, let us say giving higher figures of his previous sales turnover or whatever it is. And there is some element of forgery, fraud, whatever it is, finally ending up in a cheating. So the bank, by way of forensic audit, finds out that yes, it is not a normal case wherein this person has been given a loan, but by providing details which are not the facts, he influenced the banker to part with the loan amount, to sanction the loan amount, and ultimately the loan is sanctioned. Now, from this time onwards, the default turns from a civil case to a criminal case. The banks do not stop with the forensic audit, so automatically they lodge a complaint with an LEA. Maybe the local police or sometimes the special banking securities wing of the CBI. So wherein the concerned officer, the proper officer authorized to file a complaint, goes to the LEA and says so and so has obtained loan from us. He has defaulted from for payment of principal and interest. And while doing a forensic audit, these are all the factors which we have found out, and we are trying to establish a case of forgery, fraud, cheating, and finally a conspiracy, which are all part of a scheduled offences under the erstwhile IPC, now the present BNS. Now the LEA goes through the complaint, identifies yes, there is a prima facie case that is made out, and the bankers are right in saying that the loan was obtained by way of fraudulent mechanism. So they register a criminal case under the provisions of the erstwhile IPC or the present BNS for the acts done by the borrower. Now imagine a situation wherein there is no PMLA Act involved in it. So they will go, find out, investigate, establish the offence, and the trial under the CRPC, read by the IPC or the BNS as the case may be runs in, and finally the person is either convicted or let off or whatever it is. That is a different issue. This is an era where PMLA Act is not there. Now, post 2005, when the PMLA Act was introduced, for any criminal offence, or in other words, a notified offence as notified as a predicate offence under the PMLA Act, there is a separate investigation which is being conducted by the appropriate authority for the offence of money laundering, mainly to identify by doing a criminal act, what is the proceeds of crime derived by the offender. Now, if you have a plain look at it, if you look at the major facts of the case, as I told you, the first thing would be he borrowed loan of 20 lakhs, utilized it for his business purposes, and then majority of it he purchased a commercial property. Now, if you look at it, if you take the money trail, it will lead you to purchase of that property. So the first step is that property becomes the proceeds of crime. Number two, it doesn't stop with that. Although the value may be by this time, and at the time of borrowing, the property would have purchased at 18 lakhs, but now the property, the current market value may be 1.5 crores or 2 crores or often even 10 times. That is not the criteria here. How is the proceeds of crime being utilized? It is not as if somebody borrows, I pay you back with interest. It is not the case in money laundering laws. Now, in the instant example, what I have given is the investigating authorities under the PMLA trail the proceeds of crime, identify the commercial property, and find out, yes, this commercial property is by way of acquired through laundering of money out of the criminal act done by him. The next step, he has derived income from that property by way of monthly rentals and subsequently acquired an agricultural property. Now that agricultural property has also become tainted, and the authorities step in to consider that as a second arm of laundering and take action against that property also. Now he is deriving agricultural income. Normally, an offender will always boost the agricultural income to show his intended purchases of other properties, to have to show the means of acquiring other properties. So a tendency of a person is always to boost the agricultural income. Let us say in this case also, the person has boosted an agricultural income of say 80% of his total income in his IT returns or balance sheet or whatever it is. And through this, let us say he has started a new business, investing 50% of the amount, and which has now become one of the top-notch startups in the country. Now the money trail doesn't stop with the agricultural income, it goes down to that business, and that entire business is considered as the proceeds of crime, even though independently that business may earn income. The authorities will look at the capital for starting up that business has come from the agricultural income, which is through a tainted property, which is through a commercial property tainted and rent. So that such is the effect of money trail that is being perceived and it is being followed. So it doesn't stop with the mere default of principal and interest, and for a criminal offense, that is the end. And in fact, some of the IPC offenses are compoundable. Compoundable meaning if I pay back the money to the loan, yes, sometimes the case is closed. It's a compounding offense, but there is dispute about it. Even when lost to the public sector banks is being resolved, yet the criminality continues to continue. Now here, the money laundering laws are such that it is going to the end of it and finding out, and the person is being denied the possession of the property, and action is being taken for confiscation of the properties, and he is being punished for the offense of money laundering. So that is the power of money laundering offense. That is the strength of the investigation that it goes. Now, as I said, coming back to the three important global mechanism of sin, there is a placement, there is a layering, and integration. How does the person place the money? I mean, as I said, coming to the example, when he takes a loan from the bank with an intention to cheat the bank or to purchase a property, so automatically he uses the money, that is the criminal money, that is the proceeds of crime, and invest in a real estate, invest in a property. This he may do it independently or take the assistance of an agent. That is a separate issue. But the first thing which an offender intends to do in most of the cases is, as we say that, deposit money into banks. Nowadays, deposit of money, cash into banks has become very difficult, and banks start questioning for any cash deposits. So the easiest way would be to buy a precious metal, or invest in real estate, or invest in securities. So this is the first stage, and that is where the government thought, let us put a spoke on the persons who provide services on the first stage of placement. So they brought the banks first into the sector for monitoring, KYC monitoring. Then they started to bring the other sectors, like as we say, the reporting entities of precious metals and real estate, so that they are the arms and tools of the investigating department, and they help the investigating department in identifying how the placements are being made in case of an offense of laundering. Then comes the layering aspect, where they break the audit trail and create complex financial transactions to make the tracing difficult. And finally, as I say, placement and integration in both the areas, the real estate sector and the precious metal sectors, are being used such that they convert the tainted property to make it visible as though they are free from any encumbrance. These are the three major steps. Globally, any crime, whether you take an offense of murder, whether you take an offense of cheating, whether you take an offense of an IT fraud, everywhere this will be inherently available. May not be visible, but if you go deep into it, these three stages will be there in any case, whether it's a political case, whether it is a bank fraud case, whether it is as I said, an IT software case or whatever it is, everything this will be visible. So that is where the government thought that certain businesses and professions are likely to be misused for the offense of laundering or terrorist financing. I am not going deep into the other two acts of the UPay or the WMDA. I'll give a small outliner to the other two acts, but I'm concentrating today only on PMLA. So the department thought, why don't we bring them the vulnerable sector as a reporting entity, obligate them with certain basic parameters so that they are the watchdogs for the government and report to us any transactions which are likely to be derived out of an offense of laundering or which can be a suspicious one. Not all transactions can end up in a laundering case, but it can be a suspicious transaction such that when such transactions are reported to the appropriate agency, it is being disseminated to the concerned departments and they'll take care of it. So basically, somewhere we should draw the information. Without the information of somebody knocking the doors of a real estate agent and asking for, I am interested in buying a property, but I have money of 1 crore, I am interested in buying a property. How do the department know about it? So the department thought that let us put some persons in place who are the most likely sectors or organizations which are likely to be misused for an offense of money laundering, and let us put them as a self-restricted organizations so that they do a self-appraisal of it and do it. But normally in our country, always moral policing comes into place and nobody will suo moto report a transaction which they feel as also suspicious. Very rarely they do because of the, for example, if somebody comes with to a precious metal dealer with a broken, let us say, broken chain or whatever it is. The first suspicion will be definitely for a broken chain. Oh, how can it come? How can a broken chain come? Why is he coming? Okay, let us inform the police. But the tendency as a common man, even me, why should we go on in because the police fellows will ask us a lot of questions, whether, how, what, when, which, why should we report? Either we deny the transaction, you go to some other shop and exchange it, or okay, for the purpose of whatever is the nature of the urgency of the business or the situation which everybody is facing, they will accept the transactions. But here, that's this petty offense. Now we are looking at a larger sector wherein we should make the reporting entities bind by law to make them obligatory to follow certain principles, to follow certain norms, to appoint certain persons who will be responsible for the reporting mechanism for whatever it is as prescribed under the PMLA. I am not going into deep into the liabilities. I'll come to it later. So initially, when reporting entities definitions were defined, they brought banking companies. Now it is also there. Financial institutions, it is also there. Intermediaries, it is also there. And they have the last column called the persons carrying on designated business or profession. And they introduced the Section 2 SA in 2013. So they designed casinos, IG registration. Earlier, if you look at it, the registrars and sub-registrars were appointed as Registration Act. Now, as a real estate agent may ask, sir, why should we come into place when all the transactions are figuring in the database of the registration department? Yes, we do understand that. So that is why we have made them as a designated business or profession. But it was changed from the registrar and sub-registrar because the volume of such entities will be very high. So we made the IG registration appointed under the Registration Act as a person who is carrying on designated business, but it is yet to be notified as on date. So the third one was real estate agent, which has been notified now, and dealers in precious metals and precious stones who have been notified now. And last thing is any other person notified by the central government. That is where the government has kept a window open to include anybody. My guess, tomorrow they may fix a value for motor vehicle more than a specified amount. They may bring such person, motor car dealer. They can bring anything. So that is where they keep, see, wherever the government feels that a person can launder the money, the government will bring in future all such people. I am sure that the government is not going to restrict only to the real estate agent and precious metals. The scope is going to get enlarged in the next 10 years after going through the various databases available with regard to the methodology in the way of concealment of the proceeds of crime. So as of now, our topic is now the dealers in precious metal and precious stones. Now, whether the first question is whether all real estate agents will come as a reporting entity, whether all real estate agents should follow the principles as laid down under the PMLA Act and the corresponding rules. No. The notification clearly says a person providing services in relation to sale or purchase of real estate and having annual turnover of 20 lakhs. Now, if your annual turnover is less than 20 lakhs in a financial year, yes, you are totally out of the scope of the obligations as mentioned in the Act. Forget about the other aspects. As a reporting entity, you need not worry about the obligation. You need not worry about setting up a principal officer, setting up a director, following up the reporting structure, all those things. But in a financial year, if you have crossed 20 lakhs, automatically the obligation is cast upon you. And in the subsequent year, you cannot enjoy the exemption of 20 lakhs. Let us say, for example, in 24-25, your total turnover is 24 lakhs. The moment you had crossed 20 lakhs in 24-25, you have to start follow the procedures as prescribed under that. And from 1st April 25 also, without prejudice to it is not like a tax exemption wherein you can avail every year. It is not the case. So the moment if you cross an annual turnover of 20 lakhs, you are obligated to follow all the procedures as a reporting entity as mandated in that. Now, if you look at the PMLA side of the real estate agent definition, they have simply said, although the notification itself says services in relation to sale or purchase of real estate. So this is a very wide connotation of services in relation to sale or purchase of real estate. If you look from the investigating officer's view, I will hold a bond seller, like you pay a stamp paper vendor, may also come into this picture, but that is not the intention. But the wordings that have been put into the notification which notified the date from which the reporting entity of real estate will come into play simply says services in relation to sale or purchase of real estate. So the services include selling of a stamp paper, stamp vendor who writes, document writer, yes, he will come. But the satisfying aspect is the 20 lakhs. But so far that interpretation has not been explicitly said. They are restricting with the definition as mandated in the PMLA Act. So section 2 VA6 means a real estate agent as defined at the erstwhile service tax regime. Now GST has changed, but still they are maintaining the erstwhile definition of real estate agent only, which says a person who is engaged in rendering any service in relation to sale, purchase, leasing, rental or arranging of any movable property and includes a real estate consultant. So this is the ambit of the transactions which are coming under the purview of a reporting entity. Once again, I reiterate, although the definitions may say so, unless and until your annual turnover is 20 lakhs, you don't need to worry about it, or the obligations cast upon the law is not mandated to be followed. Now, RERA has got a very wide definition on this. As I said, the notification speaks about a small definition. The PMLA Act defines what is a real estate agent, but RERA has given a wider meaning of a real estate agent, which is now being interpreted with regard to the definition of real estate agent. So have a careful look at all the three definitions, and if you feel that you are satisfying RERA's definition of real estate, kindly follow it. Although there may be a slight difference between the PMLA definition, the PMLA notification and the RERA notification, you may feel that you may come out of the ambit, but yet for the purpose of ensuring that you are not being penalized for non-compliance of provisions, let us follow the RERA definition, because that's a wide connotation taking into consideration all activities that a real estate agent or a consultant is making. I'm just referring the real estate agent definition as per RERA, but I'm not reproducing it for want of time. Now, when it comes to precious metals or dealers, as we say, real estate comes under an annual turnover of 20 lakhs. But when it comes to dealers in precious metals, the government has clearly made a mark such that I am okay with any transactions that are happening by way of a transaction through a banking channel. A transaction that is routed through a banking channel, maybe an RTGS, maybe a NEFT, maybe a credit card payment, maybe a debit card payment, or an online payment. I am not worried about it. As long as the transactions are happening through banking channels, I am not going to disturb any dealer in precious metals. So my focus will be looking at a person who is rendering, who is likely to commit an offense or who is engaged in an offense of money laundering, deriving cash. I'm looking at cash because the government always feels that the cash business mechanism is the most easiest way for a launderer, rather than, because somewhere down the line, if transactions are recorded in bank, somewhere now with the artificial intelligence in place, it will automatically get identified by way of scrutiny, by way of analytical this thing by the taxation departments, it will come into light. But cash transactions, yes, because there is a cooperation, there is an understanding between both the buyer and seller such that it is easy for the buyer also, with due regards to all of you, it is easy for the buyer also and easy for the seller also to make a purchase and cancel it later. So the government intentionally has now made a definition such that a reporting entity under the category of dealer in precious metals will be a person who engage in a cash transaction with a customer equal to or above 10 lakhs. It may be a single operation or in several operations that are to be linked. Now, suppose I come to a jewelry shop, buy a jewelry today for 5 lakhs. I complete my transaction and I come next month, do my another transaction for 4 lakhs. It is not interlinked. But today I come, buy a jewelry for about say 12 lakhs, pay 5 lakhs today, pay the next installment the next month, pay the balance installment the third month, it is interlinked. So we are distinguished between a transaction as a separate. So here that 10 lakhs is the mandate fixed for somebody dealing in precious metal to come into the ambit of a reporting entity. Anybody who is not indulging in any dealer in precious metals or stones, who are not accepting or encouraging any cash transactions, need not be a reporting entity under the PMLA. I am not talking about the other two acts. PMLA has got a benchmark of 10 lakhs and that to a cash transaction. So others can still continue to be a non-reporting entity and follow the other provisions of law as mandated. Now, dealer, who is a dealer? So we borrow the definition from the S12 CST Act, and whatever is defined under Section 2 IB and Clause B of Section 2 of CST Act is applicable for dealer in precious metals also. The government has also defined what is precious metal: gold, silver, platinum, palladium, rhodium, and all those things. And stones also they have notified. And I don't think there may be any other precious metals. You are the best judges in the trade. I think all have been covered in this. So such that any person dealing with as defined under this 2B, 2SB and 2SC and with the cash transaction of 10 lakhs, they are to be a reporting entity under the PMLA.
Karthikeyan, sir.
Yeah.
Sorry to interrupt. Just a request in the chat box from Chairman Tamil Nadu Jewellers. Konjam Tamilum pesunga.
Oh, I'm ready.
Thank you, sir. At times, both bilingual.
Yeah.
Thank you, sir.
Now coming back to the basic two-liners which I had spoken earlier. Real estate agent ஒருத்தர் எப்ப reporting entity satisfy ஆகிறாருன்னா அவரோட annual turnover 20 லட்சத்துக்கு மேல இருந்தாதான் அவர் reporting entity-யா வருவாரு. PMLA ஆக்ட்ல சொன்னபடி உள்ள ஆப்ளிகேஷன்ஸ் அவர் பண்ணியாகணும். PMLA ஆக்ட்லயும் ரூல்ஸ்லயும் சொன்ன மெக்கானிசத்தை ஃபாலோ பண்ணணும். அவரோட ஆனுவல் டர்ன்ஓவர் 20 லட்சத்துக்கு கீழே இருந்தால் அவர் இதை ஃபாலோ பண்ண தேவையில்லை அண்டர் PMLA. ஐ எம் நாட் டாக்கிங் அபவுட் அந்த மற்ற ரெண்டு ஆக்டை விடுங்க. The benchmark of 20 lakhs annual turnover ரியல் எஸ்டேட் ஏஜென்ட்டுக்கு PMLA 20 லட்சத்துக்கு மேலதான். பழையபடி சொன்ன மாதிரி இப்போ ஒரு வருஷத்துல நீங்க 20 லட்சம் தாண்டிட்டீங்க அப்படின்னா அந்த வருஷமே நீங்க ரிப்போர்ட்டிங் என்டிட்டியா நீங்க ரெஜிஸ்டர் பண்ணி நீங்க ரிப்போர்ட்டிங் மெக்கானிசம் ஸ்டார்ட் பண்ணணும். அதுக்கு அடுத்த பினான்சியல் இயர் உங்களுக்கு டாக்ஸ் மாதிரி எக்ஸம்ஷன் கிடையாது. டே 1ல இருந்து அந்த வருஷம் நீங்க 10 லட்சம் தான் பண்ணிருப்பீங்க, இருந்தாலும் நீங்க உங்களோட ரிப்போர்ட்டிங் என்டிட்டியோட ஆப்ளிகேஷன்ஸை தொடரணும். அதே மாதிரி பிரஷியஸ் மெட்டல் டீலர்ஸ் நார்மலா எந்த பிரஷியஸ் மெட்டல் டீலரும் ரிப்போர்ட்டிங் என்டிட்டியா கிடையாது. யார் ஒருத்தர் 10 லட்சம் ரூபாய்க்கு வியாபாரம் கேஷ்ல பண்றாரோ அவர் தான் ரிப்போர்ட்டிங் என்டிட்டியா கன்சிடர் பண்ணப்படும். உங்களுடைய பிசினஸ்ல எல்லா டிரான்சாக்ஷனும் உங்களுடைய வரவு செலவு அனைத்தும் பேங்கிங் சேனல்ஸ் மூலமாக இருந்தால் நீங்க ரிப்போர்ட்டிங் என்டிட்டியாக வர தேவையே இல்லை. எங்கேயாவது கேஷ் டிரான்சாக்ஷன் பண்றீங்க, 10 லட்சத்துக்கு மேல இருக்குது உங்க கேஷ் டிரான்சாக்ஷன் அப்படின்னா ஆட்டோமேட்டிக்கா நீங்க ரிப்போர்ட்டிங் என்டிட்டியில வந்துருவீங்க. அந்த 10 லட்சமும் சிங்கிள் டிரான்சாக்ஷன்ஸ் ஆர் கம்பைன்ட் டு ஹாவ் அ சிங்கிள் டிரான்சாக்ஷன். அப்ப நான் கடைக்கு வரேன், உங்க கடைக்கு இன்னைக்கு ஒரு நகை வாங்குறேன், நான் சொல்றேன் நகையோட மொத்த மதிப்பு 12 லட்சம் ரூபாய் சார், நான் கேஷ் கொண்டு வந்திருக்கேன் சார், நான் இப்போ ஒரு 5 லட்சம் கொடுத்துறேன் சார். அடுத்த வாரம் உங்களுக்கு தெரிஞ்சவர் கடைக்காரர் உங்களுக்கு தெரிஞ்சவர், வருஷம் காலகாலமா நீங்க அவர்கிட்ட வாங்கிட்டு இருக்கீங்க சார். அடுத்த மாசம் நான் ஒரு 5 லட்சம் கொடுத்துறேன் சார், அதுக்கு அடுத்த மாசம் ஒரு 2 லட்சம் கொடுத்துருக்கேங்க சார், அந்தந்த ரேட் கோல்டு ரேட்டுக்கு நான் கொடுத்துறேன் சார், ஆர் வாட் எவர் இட் இஸ் அக்ரீட் ரேட்ஸ் போனீங்கன்னா அந்த நகைக்கு உண்டானது 12 லட்சமாக கருதப்பட்டு நீங்க அந்த டிரான்சாக்ஷனுக்கே ரிப்போர்ட்டிங் என்டிட்டி ஆயிடுவீங்க. இல்ல சார் நான் 5 லட்சம் தானே சார் கேஷ் வாங்கினீங்க, கிடையாது. அதே மாதிரி 5 லட்சம் டிரான்சாக்ஷன் வாங்குறீங்க, பாக்கி இருக்கிற 5 லட்சம் நீங்க அடுத்த மாசம் நீங்க செக்ல வாங்கினீங்கனாலும் நீங்க ரிப்போர்ட்டிங் என்டிட்டியா வந்துருவீங்க. ஓகேங்களா? ஸோ நீங்க உங்களோட பிசினஸ்ல கேஷ் வாங்காம, ஏற்கனவே இன்கம் டேக்ஸ் ஆக்ட்ல வந்து 269 I'm not very familiar with the IT provisions. 2 lakhs மேல டிரான்சாக்ஷன் பண்ணக்கூடாதுன்னு ஏற்கனவே ஒரு பெஞ்ச்மார்க் ஐடி ஆக்ட்ல இருக்கு. இருந்தும் இது ஏன் சொல்றாங்கன்னா அவேர்னஸ் வந்து கிரியேட் பண்ணணும். அதனால தான் வந்து இதை கொண்டு வந்து, அண்ட் த கவர்மெண்ட் ஃபீல்ஸ் தட் ரியல் எஸ்டேட் அண்ட் ப்ரெஷியஸ் மெட்டல் செக்டார் தான் இந்த மணி லாண்டரிங் பண்றவங்களுக்கு ஏத்த பிசினஸா இருக்குதுங்கிறதுனால இவங்க 2 பேரோட கண்ட்ரோல கொண்டு வராங்க. இது கண்ட்ரோல்ல கொண்டு வரல, நீங்க வந்து கவர்மெண்ட்டுக்கு ஹெல்ப் பண்றீங்க டு ஐடென்டிஃபை டிரான்சாக்ஷன்ஸ் that are against the law. ஒரு குற்றம் நடத்தி அந்த குற்றத்தினால ஈட்டிய அமௌண்ட்டை ப்ரொசீட்ஸ் ஆஃப் கிரைம் சொல்றத வந்து நீங்க செலவழிக்கிறீங்க. நீங்க செலவழிக்கிறது வந்து ஒரு அசையா சொத்தோ இல்ல அசையும் சொத்தோ வாங்குறீங்க. அதுல வந்து மோஸ்ட் இம்பார்ட்டண்டா இருக்கிறது வந்து ரியல் எஸ்டேட்டும் ப்ரெஷியஸ் மெட்டலும் தான். அதனால தான் இந்த 2 செக்டாரும் PMLA ப்ரொவிஷன்ஸ்ல கொண்டு வந்திருக்கு. நான் எங்களோட ரோல் என்ன, இப்ப டிஜி ஆடிட், டிஜிடிபிஎஸ் எங்கேருந்து நாங்க வரோம் இதுல அப்படின்னா, ஒவ்வொரு இதை யாராவது ஒருத்தர் நடத்தணும். FIUன்னு ஒரு ஆர்கனைசேஷன் இருக்கு, அதுக்கு ஒரு டைரக்டர் இருக்காரு. என்போர்ஸ்மெண்ட் டைரக்டரேட்னு ஒண்ணு இருக்கு, அவர் வந்து PMLAல யார் வந்து தப்பு பண்றாங்க, அவருக்கு என்ன தண்டனை கொடுக்கணும்ன்றது அது பார்த்துக்கும். பட் இந்த ரிப்போர்ட்டிங் என்டிட்டிஸ், who will manage this reporting entity? So the government nominated CBIC as a person or an authority who is empowered to regulate the reporting entities. So CBIC nominate பண்ணிருக்காங்க. அந்த CBIC வந்து ஒரு சர்க்குலர் கொடுத்து DG ஆடிட் அவங்கள வந்து ரெகுலேட்டர் ஃபங்க்ஷன் பண்றதுக்கு நாமினேட் பண்ணிருக்காங்க. So the government of India has appointed CBIC for the purpose of regulating this reporting entities, to give instructions, to issue guidelines or whatever it is. And accordingly CBIC has in turn given the power or delegated the power to DG audit and assigned the functions of a regulator. So DG audit என்ன பண்ணிருக்காங்கன்னா, the moment it was appointed as a regulator in 21, a series of guidelines வந்து issue பண்ணிட்டு இருக்காங்க. I don't know how many of you have seen those guidelines. I think GJEPC ல for guidelines for AML for precious metals is still available. Real estate agents, I don't know whether RERA website has got it, but the DG audit has been continuously giving the guidelines, and after the amendment came in 23, they have revised, and the current guidelines are issued on 29/11/2023. It is a very exhaustive guideline, and I request each and every real estate agent and each and every dealer in precious metals to please have a look at it. It is not a robotic science paper. It's a simple English. நீங்க என்ன பண்ணணும் என்ன பண்ணக்கூடாதுன்றது அதுலயே இருக்கு. If நீங்க வந்து நீங்களே படிச்சு தெரிஞ்சுக்கலாம், or you can give it to the professional hired by you for finalizing accounts or whatever it is, or just go through it. என்ன அதுல சொல்லிருக்கு, இது யாரும் ஒன்றும் பெருசா வந்து இது பண்ண தேவையே இல்லை, robotic science கிடையாதுன்னு சொன்ன மாதிரி. So please go through it. It is a very descriptive. நீங்க யார் ரிப்போர்ட்டிங் என்டிட்டி, அவர் என்ன பண்ணணும், அவரோட obligation என்னெல்லாம் பண்ணக்கூடாது அவரு. So it is very clearly defined. I don't want to go through it. It's a 40-page guidelines for each of the sector, each of the reporting entity. So kindly go through it, and I have shared this PPT with Mr. Mohan, and I have given a hyperlink to the guidelines. For jewelers, you can go to GJEPC website and you can find out the circulars issue. You can find these guidelines. Real estate agents, I don't know, but we are ready to share the copy of it also. So please go through these guidelines, which is a comprehensive guideline for every reporting entity, for these 2 reporting entities to be followed. Real estate agent தனியா இருக்கு, precious metal dealersக்கு தனியா இருக்கு. So please have a look at it. Now I'm just giving a brief of what is there in the guideline. Now PMLA என்ன பண்ணாங்க, they introduced a special section 4, chapter 4 rather, which gives the responsibility and obligations under the act itself. Normally people who are well aware of the act will always understand that the act is more powerful than the rules. Rules are just specified as to how it has to be done, but the act is very powerful. So the act made it mandatory what are to be done by a reporting entity, like KYC norms, conducting a due diligence. All those things are specifically described in the act. Now, how to what does the rule says? I'm just giving you a small points on that. It's a very descriptive mechanism of what should be done. So what is it? You have to discharge the statutory responsibility of a reporting entity. So it defines what is the statutory responsibility, and the most importantly is why are you doing it? You have to detect possible attempts of money laundering and financing of terrorism. Possible attempts of money laundering. Sir, எப்படி சார் நாங்க possible attempts of money laundering பண்ணுவோம் நாங்க? எப்படி சார் நாங்க என்ன சார் போலீஸா சார்னு கேட்கலாம். But a simple thing, let's say for example, நீங்க வந்து you have made a point that you are not going to indulge in any cash transactions. Suppose உங்க கடைக்கு ஒருத்தர் வராரு, உங்க ஷாப்புக்கு ஒருத்தர் வராரு, சார் எனக்கு வந்து கேஷ்ல ஜுவல்லரி வாங்கணும் சார், என் பொண்ணுக்கு கல்யாணம் சார், ஐ வாண்ட் டு பை ஜுவல்லரி சார், பட் நீங்க கேஷ் அக்செப்ட் பண்ணுவீங்களா சார்னு கேட்குறாங்க. எடுத்தோடனே கேஷ் அக்செப்ட் பண்ண மாட்டோம் சார், சாரி சார் நீங்க போகலாம் அப்படின்னு சொல்றது ஒண்ணு. எஸ், யூ கேன் டூ இட், நத்திங் ஸ்டாப்ஸ் ஃப்ரம் யூ. பட் why don't you go into the next step? அப்படியா சார், ஓகே சார், நீங்க உங்களோட கேவைசி எல்லாம் கொடுங்க சார், நான் செக் பண்ணிட்டு உங்களுக்கு சொல்றேன் சார். Get his basic information, because today if you refuse it, tomorrow he is going to some other shop or utilize this cash that is available with him to launder in some other mechanism also. He may go for a real estate purchase or so these are all interconnected. Suppose somebody comes with you with a hot cash of 12 lakhs and intends to buy a jewelry, 100% I am saying you that 12 lakhs is not under the mechanism as mandated under law. It may be I will not say it's a crime money. I will not say it's a crime money. It may be a tax evasion also. But let us not be a judge sitting on it and say, okay, this is a tax evasion case only. Why should I do it? My reporting entity obligation is only for a criminal activity as mandated under PMLA. Why should I do that dissection? The government has given you the power as a reporting entity. So, having knowledge of a transaction, somebody knocking the door at you and asking for a cash transaction to accept for a 12 lakhs is itself attempt to launder things. So at the first stage, if you refute without taking any of his KYC particulars, it's going to be a waste. Nobody is going to know about it. Or he may go to some other shop, put 6 lakhs in one shop and 6 lakhs in another shop, having known all these factors, split his transaction such that the entire 12 lakhs will escape the route of detection, which the government intended by way of getting it to a reporting entity. So in those cases, I would suggest personally, take the information, have it with you and report it. Although you may not be a reporting entity, nothing prevents you from reporting a suspicious transaction to FIU. Nothing prevents you. Nothing prevents you. So detect possible attempts of money laundering. The only thing is the awareness has to be created in the minds of the employees, in the minds of the staff, in the minds of the top management. Everybody has to have this mindset. If your mindset is say, if you are in that mindset, then yes, I will fully understand that you will report anything which is coming to you. But narakada transaction namiye report pannanum. Similarly, for a real estate agent coming back, somebody comes to you and says, sir, I have a property, I am having money, sir. I want to have a property. I want to buy a property. He may convince you saying that, sir, our property with sir, மொத்தம் 1 கோடி சார், அது வந்து அந்த செல்லர் வந்து நான் வந்து 60 லட்சம் ஒயிட் 40 லட்சம் பிளாக் இருக்கு சார், எனக்கு இப்ப அந்த 40 லட்சத்துல வந்து நான் வந்து ஒரு தனி ப்ராப்பர்ட்டி வாங்கணும்னு பாக்குறேன் சார் அப்படின்னு. Now you are aware of a certain transaction. I mean, coming back once again, it may not be a crime money. It may not be a crime money. It may be a tax evasion or evasion of stamp duties. I fully agree. But don't be a judge on it. Note those transactions and kindly report it to the FIU. Now, I will give you one more example. Now, during festival time, somebody is knocking your door saying that I am a corporate, sir. I want to give 1 gram coin to various people. So I would like to have some 50 coins. But unfortunately, I can't give you this thing, sir. I want to pay cash only. So you split the bill into 3, 4 or whatever it is. One in the name of X company, one in the name of Y company, one in the name of Z company. You are the controller. You are a group. Now you know pretty well that these are group companies and asking you to bill it in different so that you are under the benchmark of 10 lakhs. So here you report the transaction with a suspicion that these are all group transactions and ending up in more than 10 lakhs. And number 2, somebody paying a cash and buying a gold coin is definitely 100% it's a bribe. It's a bribe. Maybe a banker, maybe a government employee, with all regards to others. So these are all the nature of transactions which the government wants to get it from you to help us in identifying the laundered money. So detect possible attempts of money laundering and financing of terrorism, and implementation of effective measures for all relevant legal and not only knowing it is enough, you have to understand how the reporting mechanism, your staff should be aware of how the reporting has to be. So you have to, even though you may be a small company, there is nothing wrong in having a 1-page statement of policy and procedures. Let it be simple. Let that be awareness. let it be recorded. This is my statement of policy. Tomorrow, if somebody comes and asks, yes, sir, we have a statement of policy. Statement of policy need not be a 10-page, like how a corporate, like finally you will be asked to do a tick mark and then you will say yes. You may not know what is in the 3 pages, but finally you will click that I agree and then sign. That is a different issue. But I don't want that. Have a simple 1-page statement of policy of what you are doing as a reporting entity and what you are following. That is enough to convince tomorrow if somebody lands in your place to do an audit, you can simply show these are my statement of policy in a simple words and we are following it. The law says you have to have a statement of policy, but it doesn't say that you should have a complex statement of policy running into pages such that neither the employee understands nor the person dealing with you understands it. Have a simple statement of policy and procedure which is understood by the staff members. And if you feel that your statement of policy is missing out certain links, do a periodical review and correct those measures. And also adopt client acceptance policy. By doing this as a reporting entity, at the same time, don't harass the clients also. Make sure that you are getting a minimum. Am I audible?
Now you are audible, sir.
How much I missed out?
Well, last few seconds only.
Yeah, okay. Sorry, some technical issue. Sorry, extremely sorry.
At the end, some few questions are also there that has to be taken.
Yeah. So you're running out of time. Okay. So as I said, the obligations are, it's a simple way, maintain the records. As I reiterate here, it is not only an executed transaction, it is an attempted transaction also. The law also says attempted transaction. So maintain all records. What to be maintained are described in the PML rules and have mandatory information on all the nature of transactions. Do nominate a designated director and a principal officer. You may say, sir, mine is a small shop of 10 by 10, sir. Where will I go for a designated director or principal officer? But unfortunately, the law mandates it. If the Companies Act mandates certain person, if it is the status of a company to have a director, managing director and all, there is nothing wrong in the PMLA and the PMLR to insist you on to have a designated director and principal officer. Do it, but the designated director should be at the management level and the principal officer should be at the working level, such that the designated director is in charge of the compliance part and the principal officer is in charge of the day-to-day affairs of the and the best thing is the maintenance of the confidentiality of the. So if confidentiality is not maintained, the purpose of you reporting a transaction goes for a hit. The purpose of this goes. So please maintain the confidentiality whenever there is an attempted transaction or a transaction has been executed. If you are mandated to report it, please report it and keep the information as confidential as it can be. And the minimum retention of records is 5 years. Or closure of relationship with the client or account closed. But in case if it is intimated to you that based on the inputs given by you, certain actions have been taken under Money Laundering Act, please keep the records till the case comes to a logical conclusion. So that automatically an intimation will come to you. Once it comes to you, suppose, for example, if there is an investigation under the Money Laundering Act with regard to a property, please have the documents. Don't think about the 5-year transaction period in this. So verification of identity of clients and beneficial owners. So what are all to be done is you have to identify who is the client. There is a definition of client in it and how to be done. What are all the KYC norms to be followed when it is an individual, when it is a corporate, when it is a trust, are all being defined under the Act. You need to just follow it. And that excellent definition, which is a beneficial owner. So the law does not restrict it to a client only. You may be dealing with a person who is a third PA of a politically exposed person or third PA of a money laundering offender. But ultimately, if you know that this particular person is is representing a binami, is being projected as a binami, and so is the beneficial owner, please report that this transaction has been done with this client with a suspicion that so is the beneficial owner. So all these things you need to you don't need to do any CAD job on that. If it comes to your knowledge, do the due diligence as mandated under law. You don't need to do hire a detective to find out the background of the client. Do a normal verification process, and whatever the resultant of the verification process, kindly record it and report it whenever is mandated. So obligation is reporting of cash transactions of more than 10 lakhs. All series of cash transactions integrally connected, as we said, receipt of non-profit organizations, and any forged or counterfeit currency, forged valuable security, cross-border wire transfers of more than 5 lakhs. Somebody sending you money from abroad, or you remitting somebody for sale of jewel, you are remitting money through a wire transfer to a person in Singapore. All these transactions are to be reported. As I said, it's a wire transfer. So here there is no cash involved in it. So once you become a reporting entity, you are mandated to do all these things. Now, what is suspicious transaction? Suspicious transactions have been defined clearly in Rule 3.1D of the Maintenance of Records rules. There is a definition which carries from 3.1A, so you can go through it and find out. Due to paucity of time, I'm not going deep into it. And there are timelines for reporting. For normal reporting, it is 15 days from the previous month, and if it is suspicion, at the earliest possible. So it is not that you have to wait for the next reporting period time and combine your normal reporting with the suspicious transaction reporting. Then and there you can do a suspicious transaction report, because from the LEA side, we have felt a lot of difficulty when the suspicious transaction is reported belatedly. We have various transactions where even banks do not follow the timelines, and when it comes to an LEA for investigation, by the time we go there, we had an instance wherein there was an investigation with regard to erroneous forex pay remittances in the guise of advance payment of imports. A particular bank was accepting and paying advance remittances towards imports on a daily basis. The law says, the corresponding FEMA says it is permissible subject to a ceiling of $1 lakh, but these people ensured that it is less than $1 lakh, and every day $90,000 were going, and the law also gives the time for which the proof of import has to be given. That's a wide, but knowing pretty well that somebody daily remitting $90,000 for a person who is an individual and whose IT returns are very bad is definitely a suspicious nature of transaction, which should have been reported. But unfortunately, the bank took a lot of time, and by the time they reported, and when the LEA stepped into the premises, the declared premises, it was all found to be fake. Yeah, but the investigating agencies will find out to reach them. But delay in suspicious transaction reporting will be an impedance for the agencies to act upon it. So the idea is to intimate to the FIU any suspicious transaction so that it is properly disseminated by the FIU to the concerned department, such that action is immediately taken. So delay is definitely will attract violation of the PML rules and may incur a penalty on the reporting entities also. So the word promptly has been used in the law. So promptly means like a reasonable time. So with that, I'm stopping with that paucity of time, and I'm not going deep into the provisions of law relating to it. So I would like to take on any queries on this, please.
Thank you, Karthik sir. In the chat box, already the Google form is shared. Participants are requested to kindly fill it. We have also given a link of the guidelines of PMLA for real estate agent and dealers of precious metals. The Google Drive link is posted in the chat box. Also, the contact details of our office, DG Audit at Chennai, email ID and phone number is given. Any participant wishes to seek more assistance or address us, they can use the email ID and phone number. We now proceed to take the questions. Shri Karthik, there are some 2-3 questions only. I'll just read out.
Go ahead.
Question number 1 of Mr. Aishwarya.
Yeah.
How the government will come to know about the 10 lakh cash transactions?
That is where the reporting entities are mandated to intimate to the government. That is where the reporting entity obligation comes into play. The government wants to know such transactions. That is where we are mandating you under the law to report such transactions to the government of India by way of reporting it to FIU. Once you become a reporting entity, you have to follow the procedures you can look at the FIU website. The FIU website there is an online registration for it. Once you log in, you will be provided with the user ID password. Log into it, basic information of yours will be there, and the transaction based on which you are becoming a reporting entity will be there, and you will be given a acknowledgement number of being a reporting entity. From then on, the reporting structure mechanism starts. So FIU is the nominated authority to which, as a reporting entity, you have to report. Get yourself registered also.
Second question from FinMet India.
Yeah.
I am not doing any cash transactions, but my turnover is about 10 crores. Should I register myself as a reporting entity?
Which sector? Real estate?
FinMet, I think they are more into jewelry sector.
Jewelry sector? No, not at all. Not at all. Not at all.
Slowly their FinMet is coming into. This is a general question.
Yeah. Here I want to add one more thing. Now, for the jewelry sector, you may be aware that when it comes to gold, there are different ways where the government monitors the transactions of gold. And as you all know that there are a lot of restrictions vis-a-vis dealing of gold. Most of the gold which is being dealt with are imported. Now earlier there were certain regulations under which a person can import gold. Now as of now, only the nominated agencies of Reserve Bank of India are eligible to import gold. Now since November 23, if I am right, or November 24, there is a concept of the qualified jewelers importing gold through the India International Bullion Exchange, through the IFSCA entity. Now I wonder tomorrow the definition may get wider also, like all qualified jewelers may become a reporting entity also. Just because that is the easiest mechanism where one can track. See how the government tracks the IIBX transaction to a qualified jeweler. The qualified jeweler registers with the IFSCA, with the IIBX bullion exchange, and then takes the gold, imports the gold. Now that particular portion is already that data, but with regard to each jeweler acquiring the gold is already available with the government of India. But further down steps, it is not available unless they go through the GST records or whatever it is. Now, if I am making a reporting entity structured in the IIBX stage itself, where a qualified jeweler has to report any sale of more than 10 lakh, even if it is banking, tomorrow it can become. So these are all thought process of the government. As of now, the government has decided 10 lakhs as cash transactions, which may get altered in case we want to strengthen our laundering monitoring system.
Next question from Mrs. Geetanjali. She says she is not getting payments from the builders.
Okay.
Who should contact with the TN-RERA for redressal? Madam, I think
this is not pertaining to our topic.
You can very well visit the TN-RERA office. It is in Egmore. The law officer, Mr. Prabhakar, is there. He and his officers will render assistance to you. We move on to the next question.
No, it is a contract between the that is the agent and the promoter. So, as per the terms of the contract, that is the agent can initiate a litigation against the promoter for the amount that is promised.
Yes.
Yes, that is. Please, Mohan, take the floor to you.
Yes, sir. Yes, sir. Thank you, sir. Thank you for your clarification. We move to the next question. Even if a precious metal businessman is not having any cash transaction, do they have to do PMA compliance for the company?
This is a jeweler.
Jeweler.
Dealer in precious metals, if and only if they do a cash transaction of more than 10 lakhs, they will come as a reporting entity under PMLA. But under UAPA and WMDA, because that is not the topic for today, under UAPA and WMDA, there is no specific benchmark of a cash transactions. Any reporting entity having transaction with specified entities as per the UAPA and as per WMDA have to report it. So the list of entities for which transactions are restricted for a normal thing is available in the, I think DG Audit would have already circulated the list of entities coming under the UAPA Act. The UAPA Act basically covers the terrorist organization, terrorist individuals, and all those things which are available in the Ministry of Home website. So transactions with such kind of persons, forget about the ceiling, forget about the cash transactions, you are mandated to report it. Similarly, under the WMDA, whichever organizations which has been marked by this UN Security Council, if you have a transaction with them, irrespective of the money value, irrespective of the cash or banking transaction, you have to report to it. That's the distinguish between the PMLA provisions and the UAPA and WMDA. PMLA has got a benchmark, whereas the UAPA and the WMDA does not have. But UAPA and WMDA are the client based. It identifies which client, if you make a transaction, you have to report. It is not general public.
Yes, sir. Next question of Mr. Umar Shankar. I am a manufacturer and trader. I am doing all transactions, purchase and sales, all through banking channel only. No cash purchase and no sales. But we are doing some manufacturing expenses. This is less than 10 lakhs in cash. Will I need to be registered in PMLA Act?
No, this 10 lakhs is for a client base. Unlike the real estate, wherein it is an average, is an annual turnover. This 10 lakh benchmark is with regard to a specific client. So if you have a transaction of more than 10 lakhs or more than 10 lakhs with a client, automatically you come into the picture of a reporting entity. If all your transactions are only through banking channels, you don't need to be registered as a reporting entity under PMLA, and you are not mandated to, and you are not obligated to follow the procedures as laid down under the PML rules.
Yes, I think all the questions are over. One Mr. Pratesh Kumar has requested for the presentation. The presentation will be shared with all participants. If you have already filled the Google form, it will reach you. Or else you can even send a request mail to the email ID mentioned in the chat box. We will surely share with you. The presentation is also available with the office bearers of the various associations, DJEPC and others also. So thank you, Karthik sir. Thank you for answering all the questions patiently.
Thank you.
We come to the end of this program. I would like to thank Mr. Prabhakar T.N. Rera, Law Officer, for taking his time and attending the session. Sri Mahendra Kumar Dayal, Regional Chairman, GJAPC, for joining us last time on 13th August and also today. Madam Vaishali Nayak, ADG DG Audit, for taking her time in organizing this for the benefit of all the taxpayers of the two sectors of the trade. Sri Dwarka Reddy, DGTPS, and his team of officers at DG Taxpayer Services for organizing this. I also take this opportunity to thank Mr. Karthik Kumar of Credai Coimbatore and all the participants who have joined today and made it a grand success. Special thanks to each one of you. Thank you, sir. Thank you, Karthik, sir. In spite of two other official engagements, you took time to join us as faculty. Thank you so much to you, sir. Thanks to each one of you.